Started.
Hello everyone, this is Josh and Chuck coming to you from our main office here at the Woodward Building in downtown Mount Vernon. And we've decided to make some videos. And Josh, why don't you tell everybody why we decided to make these videos?
To be quite honest, I don't want to make these videos, but we are doing this because we can't communicate with our clients in the way that we have in the past. Because of COVID-19, we have a lot of clients that fit in that demographic that they really shouldn't be out and about, and so this is our way of communicating with them, communicating with the general public, hopefully adding some additional information, our opinions on what's happening in the markets, the economy, and answering any questions that our clients have. And Chuck and I were discussing what we wanted the content of this first video to be, and Chuck, tell them what we came up with.
Well, we decided to reach out to a handful of clients and just ask what their concerns were with the market and the economy and everything else that's happening in their lives right now. Everybody's lives have changed. Everything's been disrupted because of COVID-19, and people have different concerns, and we wanted to address them and ask some questions. So we're going to have some dialogue back and forth and ask each other questions, and hopefully answer a lot of the questions that our clients had. They kind of overlap. There's a lot of similar feelings from a lot of the different clients. So if your question didn't get answered and you talk to us with a question, then hopefully in the future in another video we will be able to answer it, or we could always have a personal meeting and answer any of your questions. But we have 3 questions, and it's very general because we can't be very account specific in a video that's based for everyone.
That's right. Very good. First question. You're up, Chuck.
Josh, how has the government stimulus various programs worked? Was it enough? Will these monies be paid back? And how does this affect all of us?
I think it's a great question because this is relatively new. We haven't had a recession where the government just starts writing checks to everyone in a significant manner. So as quickly as this whole COVID-19 thing blew up, the government reacted very quickly through personal checks to everyone, and then also through PPP program, the Payment Protection Program. And I honestly think that it has worked so far. But it's a little bit too early to tell definitively if it's worked. The Payment Protection Program was $1 trillion+ and funded more than one time. But it did give businesses the opportunity to take a pause from their day-to-day and continue to pay their people, and to feel like if they weren't getting the amount of business in that they normally did, that they were able to still pay their bills and pay their rent and pay their staff. But it was a Band-Aid, it was a temporary thing. And my justification for it working so far is just look at the Dow. The Dow Industrial Index at the beginning of this year was at 27,000, January. And as it closed today, we're at 26,000. So despite all the pullbacks and 1,000 points losses and that month and a half of straight downward movement, the Dow got as low as 18,000. And now it's back to 26,000. So I don't know that it's sustainable to keep the Dow where it is. I see a lot of volatility, a lot of issues coming up down the road, but I think it's very clear that it has helped, and that's the reason the Dow is where it is. But to answer the second part of your question, was it enough? I think it's too early to tell. And I think that in the next few months, we'll be able to see if the true depth of this recession. And if this recession is as deep as I personally feel it is, then we still have some more down before we're going to go back up. But we need to get a handle around a vaccine and some other care treatments before we're going to know if this thing is in the rearview mirror. And we're not there yet. So we still have some trying times ahead of us. But our economy wasn't created to be shut down. So the last part of the question is, how does this affect us? Our economy wasn't created to be shut down. So when it gets shut down, it's hard to restart it. It's going to take time to restart it. And I think this does affect everybody. Even if it's not directly, indirectly it does. There's a lot of essential workers. At the beginning of all this, I didn't even know what essential versus non-essential was, but now that's a talking point that is commonplace. And who would think that the person who cuts your hair is a non-essential worker? But apparently that was deemed the case. And there's several industries that will also fall in this category. And because of that, we have had to adjust, and we've had to, change the way that we do business and change the way we live our lives. And at the end of this, I think that we will be stronger and better, and I think we'll use technology more. And I think that if this does happen again, which I hope that it doesn't, but who knows what happens in the future, that we'll be more equipped to handle it because we've gone through it one time. And hopefully we come out stronger this time, and we're better prepared for the next time. It kind of leads into our second question, which is, and Chuck, I'm going to ask this to you. In times of market disruption, what have we learned? What have we done? Would we have done anything different looking back? And how can we use this information to prepare for the next time it happens?
So that was a great question, Josh. And I think that it makes me think about a lot of different things. And back to, what we kind of based this video on. We have these slogans that we keep on our wall here in the office, and they're very great slogans. And they're relevant 20 years ago, they're relevant today, and they'll be relevant 20 years from now. And that's why we really like the sayings, and we read them, and we really take them true to heart. And one that makes me think about is, do something for your future self or do something today your future self will thank you for. And what we learned in this downturn is that people make mistakes. I mean, people get emotional when it comes to market investing, and in volatile times and volatility, people tend to be emotional based and pull out of the market when they shouldn't, when the market goes down. And they buy in at the wrong times because they're fear of missing out, and they want to get back in the markets when it's climbing back up. And the next thing you know, something happens and it pulls back. As advisors, this is one of our biggest strengths in working with clients, in that we can help take the emotion out of your decisions. So, as long as we stick to our plans and our goals and continue to do what we need to do, then, we should be fine. That's why we build the goals. That's why we stick to the goals. We're going to see many recessions in most clients' careers that we work with. Back to the recessions in the past that we've seen in 2001, in the tech bubble burst. And then in 2008, we had the housing and the financial market and the banks crashing. And now in this recent recession in 2020, we've seen non-essential retail, like Josh said earlier. What is non-essential? We didn't even know what non-essential was. I'm pretty sure that Lowe's and Kroger and Walmart are having their best year ever. Amazon and Apple are both up. Tech stocks are crushing it, and record highs. And energy and travel have been. Oil stocks were as low as I've ever seen them. Travel, with airlines getting crushed and shutting down. All this is affected, and it creates opportunities. It creates opportunities to buy in at the right times. And if you're smart about it, and we continue to stick with the plan that we created.
It kind of reminds me of Warren Buffett is always quoted as saying, "Be fearful when people are greedy, and greedy when people are fearful."
Absolutely.
And this has created an awesome opportunity if you had the courage to be able to pull the trigger on some of the cruise lines or the airlines when they were very low. And we did have some clients that did that. We don't normally recommend that type of aggressive investing, but there are certain times when it calls for it, and we definitely have had many conversations with many clients about it.
Yeah. So, and back to the original question of, what have we learned going towards the future? We're going to see another recession at some point in our careers and in our clients' careers and their financial lives. That we're going to see multiple recessions and downturns, and we have to be smart. We have to stay strategic in what we do and stick to our plans and our goals, which leads us to another sign that we have that we keep on our wall. It's a very great sign, and it says, if the plan doesn't work, change the plan, but never the goal. The goal is always going to be the same, to help people retire comfortably, and to help work with them to make sure that they can accomplish whatever goals they have in retirement.
This leads right into our
and
third
it leads
question.
into the third question, which I'm going to ask Josh, and that is, if the epidemic persists, how do we maintain our portfolios And should we let the current world influence our investment strategy? Ultimately, will we be okay and on track for retirement as planned?
Yeah, this is a great question because I think it speaks to the current situation, not only with the market volatility, but then how does it relate to the plan? Just like what our wall art says. Um, one other piece of wall art that we have says, "A smooth sea never made a skilled sailor," and we live in a lake community, so it kind of hits home with the smooth sea representation there. But if the markets only went up, our job would be easy. But
Irrelevant.
but they don't. And life throws you curveballs, and you got to figure out how to make it work. And you certainly don't want to make emotional decisions, especially financial decisions. So, to answer this question, I think the epidemic is still happening, and we're going to see a lot more spikes. The spikes just last week popped up, and the market was down 1,800 points. People are still scared, and as they should be. Again, we don't have a vaccine, we don't have a treatment that really works for this, other than to stay at home and stay away from it. So, that being said, we're going to see more volatility and more opportunities, and we do need to stay the course in some respects. One of our other clients asked the question of, what do we do when the markets change, when they go down? How do we make the decision of getting in and out of the markets? And we have an investment committee that I'm a part of, and there's 6 of us on this committee. The chief economist in our committee runs an algorithm. He's a techie, and there's a bunch of different inputs that go into this algorithm, and this algorithm spits out a recommendation. Our committee researches the committee looks over the recommendation, and then we put our own thoughts on it. There's a wealth of experience there. I'm one of the youngest advisors in the whole committee, and we say, does this make sense? Is this what we want our clients to do? And then based on that, we implement the strategy. And the strategy did call for us getting out of the markets for a period of time, and we avoided a whole bunch of downturn. And ironically, though, as the markets came back up, our economic indicators said that we shouldn't be back in the markets because nothing has really changed. The only thing that changed was the fact that the government was pumping in a whole bunch of money, and it was propping things up. So with that, we did decide to get back in the markets a little bit just a couple weeks ago. And I think that was the right move at the right time. We still have a lot more we can get back in with, and we will when the timing makes sense. But as for right now, we're kind of 1 foot in the deep end and 1 foot out, so that we can go either way depending on which directions the market go. But one thing that I think is important to keep in mind is how we do our business, and that is, we charge our clients a management fee, and this management fee is typically around 1%, depending on the client situation. And with that, we are similarly invested to our clients in that we want the markets to go up. If they go up, then we earn more money, the client's accounts grow, it's a win-win for everybody. The markets go down, we earn less money, the clients have less in their accounts, and we lose. So our goal is always to grow our clients' accounts, and we love this model because it puts us on the same side of the fence. And we do place a lot of trades in our clients' accounts. Our clients don't get charged for these trades. So that's part of our management service, is that we are actively managing your portfolio. Some clients are in custom models where we have individual stocks. Some clients are in our models. So we set that up on the front end so that we know what a client's looking for and can address their needs and their goals specifically to their situation. So that kind of answers all the questions that we had for today. But we want to thank everybody for joining us. This is something new, and we're hoping that the information is relevant and that it answers some of the questions that you may have. And we hope that you may share this video with your friends, family, coworkers, whoever that might have similar questions. And we hope that we can be of assistance to you not only today, but in the future. We are truly blessed to work in this industry and to have clients that trust us with their savings, and we don't take it for granted. And we work very hard and diligently to help our clients accomplish their goals. And we are confident that the goal-based financial planning that we do helps them accomplish their goals. So in the future, we plan to talk about some different topics. some market updates and things of that nature. So we hope that you're able to tune in. And that's all. You got anything else, Chuck?
Yeah, absolutely. In conclusion, I'd like to thank everybody as well, and just say if there's any questions that we didn't cover or something you'd like to see us cover in a future video as some kind of content, please reach out to Josh or myself. Send us an email, shoot us or give us a phone call, and let us know. We'll be happy to cover any videos that anybody would like. And like Josh said, feel free to share this with anybody that you know that may have these similar questions or may need to talk to somebody. Things have changed a lot. A lot of people have, lost their positions at their work and may need some advice on how to move forward. And we'd be happy to sit down with anybody and talk to them about their situation, and hopefully we could give them some advice and help them. So once again, I'd just like to say thank you to everybody who trusts us to help them with their money, and we'll look forward to talking to you again in the future. Thank you.
Thanks.